Good morning. Good morning. Welcome. This is Franco with Trading Features Live, and this is our pre-market analysis live stream. So today is September 26th. This is the last week of the month, and it's very cloudy down here in South Florida. So let's jump right into the content. We got a lot to get into. Regarding the news reports today, we don't have too much activity on the economic side. We do have a couple of Fed members speaking. We do have Bostic, and then we have Master. Master is the vice president, like is the second on board after Powell, so his statement does influence a lot on the markets, but that's going to be when the market closes, so we don't have to worry about this. Then we have this Rosengren speaking at 10, so we have to be careful with that. And then we have a couple of we have a three bond auction. We have the 3-month, the 6-month, and the 2-year, right? If we review, let's go review the entire week, because economic calendar, right? Let's put the entire week, so we have the entire information for the week. All right, so we do have this is today. This is Monday. And then Tuesday, Evans speaks. Core durable goods. Okay, core durable goods is one of the leading indicators on the economy. So we have to pay attention to this number. I like to pay attention to at the real estate markets and the durable good market, because those two are the ones that lead the economy into or out of a recession, and hence the markets react to those indicators coming out. Oh, we have the Schiller numbers. This is a real estate. Oh no, this the S&P. Sorry, and the Schiller House Price Index composite. Sorry. At 9 tomorrow. So this is a very important also. Consumer confidence. Then Wednesday, pending home sales. Powell speaks. Probably he will testify after the Fed meeting. He always get to Congress or the Senate or whatever. What else? What else do we have this week? Thursday. GDP. We have the revisions. The third revision on the GDP. It was revised a little bit, but still negative number. So this is the third revision. Remember, we do have quarterly numbers. Those are preliminary, and then we have two extra revisions, so we can have a final number here. Yeah, the Fed is very active. So remember, one of the things that the Fed do is not only the monetary policy, but the psychology of the market. So they try to manipulate or try to drive the market with their speeches, right? Then Friday, pound GDP is going to. If you guys have seen the news, the pound was dropping 5% during the Asia session, and the British economy right now is having tough times, like a lot of inflation, with their economy shrinking. So they're doing tax cuts and so on, and raising rates. So investors are there's a lot of uncertainty that up there. and that is affecting the price of the dollar because the pound is dropping a lot. All right, so here we do have CPI on the euro next Friday, so Friday is going to be important too, and we do have PCE um, on here on Friday as well. Remember, the PCE is an indicator that the Fed uses the most to um, evaluate the inflation numbers, right? And then inflation expectations and so on. All right, so we do have quite of activity this week, so we have to pay attention to these reports when come out. But today we don't have to worry about much. We do have 3 bill auctions. The 2 years I think is going to be important, but it's going to be at 1, so we probably will be done by this time. And we do have a couple members speaking, right? All right, so let's continue. The dollar was going up big time during the Asia session, but is and this is the weekly chart. I wanted to show the weekly chart because we are approaching to this triple top that was created in 2000, and then from here we dropped big time. This was the .com bubble, right? All this drop, and then we did have some other here it was the '09 crisis, etc., right? But the important part here is how the dollar behaves, right? And I want to compare this weekly chart with the 2014 move up. Here the Fed was tightening. We were coming out of the crisis, and the Fed started to raise rates a little bit, but ultimately we couldn't. And then here, sorry, the Fed was trying to ease even more here, right? And then here in 16, I remember the Fed wanted to how was it? Oh, here was here. The Fed tried to raise rates right here, and then we had the tantrum on the markets. I remember these days in 2018 where the Fed was trying to raise rates, but we couldn't, right? And then after the pandemic came, and we started the tightening cycle right here, and this is the tightening cycle that we're currently having. Okay, so my question is this thing going to turn around prices in the dollar? I think fundamentally, and what is happening right now is that the Fed is trying to tighten even more. I think this thing will not stop the price, right? But it's yet to see. We're right here right now. Okay, so we need to be aware of this and not thinking that the dollar is going to continue to go up blindly, right? All right, if we go to the daily, on the daily chart, let's maximize this. We were going up. Now, remember, this includes the Asia session. So the Asia session, the pound was dropping big time, and then the pound is recovering right now. That's why we have such a huge wick to the upside, and the dollar is basically flat. Okay, but look at this. We were from 113 almost to 114, 1.5%, right, on the index. The pound was dropping 5%. Okay, so let's go to the 30-minute, and here's where I want to see what is going on today. Here is the closing from Friday. So if we happen to break this low, I would expect the dollar to give me this type of behavior, and we can try a long on the equity markets, right? But if we manage to hold this Friday's close, I will look more for a break to the upside and a immediate retest right here for continuation on the dollar. I think the long on the dollar scenario is not very likely. because we have supplies from 2000s, and then here I do have a supply from that was created here in the London Open. Okay, and the London Open today was a very remarkable session. There were a lot of movements and volatility. All right, so here, like I said, here is the closing from Friday, and then we here's the open. We gapped up. We managed to hold these. We came. We managed to hold these, and we tried to break to the upside, but ultimately we're back to this area. I think this is going to be broken. The retest in a continuation to a lower side. It'll be the most likely scenario. I do like from the demand side, right? If the dollar happens to break down today, I would let me get rid of this. This is a higher time frame. I would pay attention to this area right here, right? I do have these pivots, right? And then the breakout, and then we have the rally-based rally, some retest, and a continuation. Now this was, when was this? This was London Open from Friday. Friday was a very, very good day for the dollar. So I think a retracement to Friday's open is not crazy. It'll be a good scenario, okay? If we happen to come back down today. All right. Let's continue. So this is the dollar, and I want to pay attention at all times to this chart, especially now that we were up and now we're retracing back down to the open. I want to see what is going on. If the dollar is going to reverse ultimately to the negative side, or it's going to continue to the upside. Like I said, the most likely scenario for me now with the US FX market open and the dollar didn't go up, I think the most likely scenario is a continuation to the downside. Let's see what happens. The bond yields continue to go up. We gapped up. Now we're trying to reverse here, but and if you go to the lower time frame, I don't have much here other than this Friday closing from here. If this is Friday's closing, if we manage to break this area, so I would expect more like around these 3.5 around here. So here we don't have to be so precise, okay? We don't need to watch this chart at all times. I just want to see where the direction is. If the dollar drops today, along with this, we will have a nice long in the equity markets. That's the combination that I'm looking for. All right. Here from this chart, finally, we do have the VIX gapping up today, 6%. Now we're approaching to these highs. But finally the VIX is telling me, all right, people are starting to feel the fear right here. Okay, people are starting to be very, very uncertain in the market, and that's the volatility we have seen. But finally the VIX reacted to the upside. That was what I was looking for. But I think investors are a little bit late. They are capitulating at the lows, right? So my analysis from this chart is are two possibilities, right? Either we break to the downside and this thing is going to continue, or a lot of investors or retail investors are going to capitulate right there at the lows, and the market will rally. Now that's easy. You will say, okay, Franco, the market will go down or will go up. Yes, that's true. But what this tells me is that investors are very late. So if we wouldn't have this gap today, right? But here, I would say, all right, so I would say the investors are oblivious of what is going to happen, and then the market will definitely the most likely possibility is that the market will continue to go down, right? And when I'm referring the markets, the equity markets, not the VIX. Now the VIX is gapping up today at the lows. Let's see what happens. I think a bounce from these lows is not a crazy idea, and we have the rates going down. If the dollar keeps going down and the VIX just stall right there, we will have a nice setup to the long side. I don't want to be like 100% biased to the long side because the markets bounce, and they bounce at the lows when everyone is very fearful. Okay, so when the most amount of fear is in the market is when the markets bounce. So if this was down here, I would say, all right, there's more downside. But and now that the VIX is finally breaking to the upside, I would say, and now the rates are starting to drop, and then the dollar is reversing. Let's see what happens, okay? But I am neutral bias with a little bit of a long bias, okay? You know, the markets are dropping pre-market though. Crude oil still within our demand. I think it's already used up, so this demand is not going to continue working. That's my opinion. So next level is right here, like 73. Let's see what happens. But I think is that if the dollar continues its upside, so ultimately the commodities are gonna have to give up some gains. They're all priced in dollars. All right. If we want to visit the rest of the commodities, lumber is dropping 5% today, and it's been dropping. We're now levels below the pre-pandemic highs. Okay, so this is a good chart to watch if you want to watch inflation. Okay, I think inflation ultimately will bend to the downside, probably not as fast as people want, but these charts are telling us that inflation will come down ultimately. Metals. Now here on metals, right? I wanted to pay attention to the metals today because the dollar was going up, but this thing was going down. Not much, probably 2%, right? When the dollar moving 1.5% to the upside, this thing was minus 2%. I think gold and silver are holding pretty well to the upside on the dollar. The dollar is up 17.5% for the year, and this thing is probably like 6% down for the year. So I think gold, even though it's going down, I think it's holding pretty well, a lot better than the equity markets that are going down. The NQ is 30%, or the S&P is plus 20% negative today for the year. All right, so but here I can tell that gold is managing to hold right here. If gold is holding and the dollar started to give up some of its gains, one thing is going to happen. Either the dollar is going to turn around or gold is going to turn around. So I want to pay attention to the dollar chart at all times today because it's a very, very important location. It's a very important level where it's at. Okay. If the dollar happens to break to the downside, I don't have much on the big picture, right? On the big picture, I don't have much. I have here from Friday, I have the demand from Friday, but after that, I don't have much, right? It'll have to come down, and if it comes down to the 108, then we have a rally on the equity market. So there are few things that are pointing for a bounce. Okay. All right, let's go to the ES. The ES is in the demand that was created. This is at the lows created in mid-June. So we came here, we bounced the last hour of trading on Friday, and we haven't broken that low. So that's quite of a given the momentum that is getting into the markets, right? I would have expected a gap down yesterday, and yes, indeed, we'd have one, but not very much, like 0.5%. Yes, on during London, we went down because of what is happening in England. Um, and where was here? This is 25th, 26th. There you go. So this is the Asia session, right? It was the lows, and we didn't break the lows from Friday, right? So I think this is a pretty important level, right? And especially because we managed to hold, and we had a run up from these lows, like for 15% plus to the upside, right? So I think buyers will try to defend this, and we'll see what happens. If the dollar comes down along with the rates are already reversing. We will have an upside right here today. All right, let's go to the NQ. Same scenario. There's not much for me. This is the demand that we draw on Friday. We have had this demand for days, so we're trying to hold these pivots, right? Unless we have some sort of event that happens, I think everything is pointing for these lows to be a hold, right? The dollar is starting to reverse, rates are starting to reverse, the equity markets are holding well. The VIX is already breaking highs to a very extreme highs. So I think this area is a very important area. So the most likely scenario for me is a bounce from here, given the fact of what the other assets are doing. Okay, that doesn't mean that this cannot be broken. This can continue to the downside, and we could have new lows, but the dollar, the VIX, and the rates will have to change, right? That's why we monitor them at all times. Same scenario for the RTY. Is even the RTY is even a better demand, because we have 1, 2, 3, 4, 5 days holding this, right? So we managed to be here a lot of times, and we ultimately broke to the upside. Let's see if we can hold this. Now, the RTY is not the most bullish right now. It caught up to the downside. Like the NQ was the most bearish during the drop, and the RTY was holding pretty nicely here. But then ultimately we had these 3 last trading days that the RTY dropped big time. Now on these pre-markets live streams, the objective for me is just to have the big picture in my mind. I want to have everything fresh of what is going on in the markets. Do I trade long or short exclusively because of these analysis? And the answer is not. Is no. I come to the markets with a bias, right? So my bias is neutral bullish, but my bias is not unchangeable. Like, it's not set in stone. I could come to the markets and say, all right, where it's at its lows, and there's a chance for it to bounce back up, but nothing is telling me to take a long, right? So I would go for shorts. Okay, so I am a day trader, and I like to see what happens real time. Okay, but these videos help me a lot to have a bias. Okay, to see the big picture, what is going on. Okay, here Apple is gapping down, right? So Apple is gapping down, but it's gapping down, but still holding this low. So it's yet to see. I do think Apple has a lot more downside, at least until 144. But we haven't broken this pivot created on mid-September, like last week. No, the previous week. Okay. So it's yet to see what Apple is going to do. I like to pay attention to Apple because Apple is the one influencing the market the most. It's the largest company. So I like to pay attention to what Apple do here. Okay, I think with that, I'm gonna wrap up, and I'll see you guys in few minutes. I'll see you guys in 10 minutes. Okay, thank you. Have a good day.